After a $54 billion bailout, Credit Suisse's stock recovered over 20%. European markets too recovered somewhat after Credit Suisse announced that it will borrow money from the Swiss central bank. But investors will focus on the Swiss government's discussions, an emergency meeting on Thursday about the fallout of the 167-year bank. The European Central Bank, though, hiked rates by 50 basis points on Thursday despite the turmoil in the banking sector. Last week, Silvergate Bank shot, followed by a collapse of the Silicon Valley Bank and the Signature Bank 2 days later. The abrupt closure of those U.S. banks is touted as the trouble of the threes that sparked fears of a broader global banking crisis and led financial markets on a roller coaster ride. After the collapse of those U.S. banks, global financial stocks lost $465 billion in under 2 trading sessions. While a mini recovery was in play late on Tuesday, news emerged of troubles at Credit Suisse. The focus of investors and regulators then shifted to Europe from the United States, despite the Swiss National Bank stepping in to infuse $54 billion into troubled Credit Suisse. There was no respite in the financial markets meltdown. Indeed, while the Swiss central bank tried to shore up investor confidence, the market rout continued with Asian markets flashing red on Thursday. Credit Suisse has been struggling for survival for a while, and for now, there seems to be no relief for Switzerland's second largest lender. That's because its largest investor, the Saudi National Bank, has ruled out any further financial assistance to the 167-year-old Swiss bank. Shares of Credit Suisse plunged nearly a third on Wednesday, hitting a new record low. That came after the bank's largest investor, the Saudi National Bank, said that it could not provide more financial assistance due to regulatory issues. The Saudi lender had acquired a stake of almost 10% last year after participating in Credit Suisse's capital raising. The Saudi bank back then had also committed to investing up to $1.5 billion. However, Saudi National Bank Chairman Ammar al-Khudairi said the bank cannot provide additional funding. Some investors are worried about the global banking system's resilience. For now, investors' focus will be on any action by central bank and other regulators elsewhere to restore confidence in the global banking system. Investors will also assess any exposure businesses may have to Credit Suisse and other risks. Sentiments remain fragile, and a nervous air hangs over investors as markets remain on edge. Okay, to more. He's an author. He's joining us live from London. Mark, thank you so much for joining us on WION. What the ECB's rate hike is doing to the global market seems to be the main question. Can you elaborate on that for us?
Well, they are in a very tricky spot because of the inflation issue. Obviously, they have prioritized the inflation issue, and it's very hard for them not to do it at this moment with exemplary inflation rates. But then again, they did. It will be interesting to see what Christine Lagarde, the president of the European Central Bank, is saying in a few minutes, because how she sort of in the type of balancing act she has to play, how she phrases it, because it seems like they will probably might not be able to raise interest rates so much further on. And if she signals that might give the market some sort of, there will be market reactions to that as well.
Do you think the ECB was right, especially now when the global banking sector is in turmoil?
Well, possibly yes, because I think Credit Suisse is a bit of a special case. They are the weakest link in Europe right now, and I think they had so many troubles before. So this extra problem was one problem too many. They had profitability problems due to a large fall in both assets under management and fall in bank deposits. And they had high-risk clients, and you were mentioning some of the big shareholders have been pulling out. So this was one problem too many. So it's not necessarily so that the other big banks are in trouble, and it might even be the case that the big banks might benefit from this, because the markets will now sort of look around and take out the other weak links. And there will probably not be another big weak link as big as Credit Suisse. So this would be smaller companies like Swedish Klarna, for example, might get into trouble. But smaller companies, and so actually the industry concentration for the big banks, that might be even bigger going forward. So the big banks might end up, as they usually do, actually in a better spot.
For joining us on WION, and of course we'll be following this story very closely. We look forward to speaking to you again very soon.
Thank you.